We have never imagined that tariffs will end up at 20-odd%, that most bearish scenario. But I think most likely it will probably end around the range of 15 to 20%. And that is still significantly higher than that 2% pre-Liberation Day, right? So there will be some impact, be it in terms of demand or in terms of inflation. And this is the reason why we are sort of like expecting that slowdown in U.S. economy, and we think that, you know, the potential of downside risk to growth remains pretty high. So I would sort of like point that out.
So strategically, when you look across the region, Eddy, we were talking earlier, you're neutral on China, but you like China tech. Can you elaborate on that position? If
you look at China tech, I think in terms of valuation, they are certainly cheaper or more attractive versus the US tech, right? And in terms of policy support or stance, we have actually seen or witnessed a pivot in terms of China policy stance, especially with that end of February meeting between President Xi and all the entrepreneurs.
The deep-seek Sputnik moment.
Oh, too. Yes, exactly. Right. So we thought that that policy support is actually very important. It means that the government recognizes the importance of the tech sector's contribution to the economy, which we agree. Right, because the other part of the economy, property sector, I think that will still take a long time to bottom out. So we do need the tech sector, the private entrepreneurs, actually to start contributing, to start employing more people.
Okay, so when you say China tech, I mean, we're talking about a broad range of Chinese companies. Is it a BYDs we're talking about? Is it a Xiaomi? Or is it Alibaba?
I think across the board, if you look at the mega tech, obviously people will look at the likes of Tencent, Alibaba, BYD, these are the leaders in their respective areas. But I think one point we wanted to highlight is recent policy is also focusing on what they call anti-involution, meaning to say trying to curb irrational price competition. And I think that is actually positive for sectors such as like the electric vehicles, where BYD sits in, or in sectors such as the food delivery sector, where the likes of, say, Meituan actually sits in, which I think a more healthy price competition kind of landscape will be good for all the companies within the respective sectors.
BOJ will inform the market action, without a doubt, for the yen and for Japanese equities possibly. But given last week's breakthrough in US-Japan trade relations, to what degree does that change the narrative and how you feel about Japanese equities, Eddy?
I would say that the trade deal does, probably give BOJ some reasons to be a little bit more optimistic on the economy. But if you look at the market reaction, obviously we saw an immediate bounce in the Nikkei. But subsequently, we saw the rally actually fading, right? Because I think if you look at the economic landscape, if you look at Japan is still subjected to 15% tariffs, export-oriented. So I think there's still going to be some impact. And given the rising political uncertainties, right, we're still not sure if Prime Minister will continue to actually stay in office with the loss of control by the ruling coalition in the upper house election. Right, and we are actually watching very closely about the BOJ event this week. While consensus is expecting the BOJ to remain on hold, a surprise hike, I think that could actually spook the market, just like what happened last year.
So, within North Asia, are South Korea and Taiwan perhaps, on balance, the better bets?
I think South Korea was interesting in terms of valuation, looks a little bit more interesting in terms of valuation, especially where we saw the run-up after the presidential election, where there were actually more optimism on corporate reforms. Whereas Taiwan, obviously Taiwan's market has actually done well because of their tech exposure, but the valuation actually does look a little bit more pricey. So on a relatively basis, I would say South Korea is looking a little bit more attractive in terms of risk reward versus Taiwan.
How do valuations look like in India? I mean, does it look promising, a laggard play maybe?
India is always expensive, 20-odd times PE, but we thought that it could be an interesting laggard play given the fact that I think a couple of points. Macro, in terms of you look at the PMI trends, they are actually starting to really turn around over the past few months. The RBI actually also has started to cut rates. That's going to be supportive for the economy. And on the trade front, while India and US have not, managed to strike a deal, but given the fact that India is quite domestic oriented, we think that they are likely less sensitive to any negative developments on the trade front.
A little bit more shielded, right?
Yes.